Now, are you qualified to do that? No, then don't do it. You don't have to do that bet when the assets are growing at 150% a year at the base asset, Bitcoin or Ethereum. You don't need to buy NFTs. You don't need to buy meme coins. You don't need to do any of these things. That's the really hard thing, is the system sucks you into greed if you're not careful, and it's unnecessary.
Bitcoin struggles to maintain its upward momentum, leading investors to wonder if the banana zone is still relevant. Bitcoin broke key resistance levels a few weeks ago, validating Raoul Pal's theory of an explosive market phase. Recent price movements have raised doubts. Bitcoin has entered a period of sharp corrections and erratic price action, instead of the sustained parabolic surge that many expected. Pal's bullish market outlook may have been too optimistic, as some see the volatility as a sign of this. Prices should be rising consistently if Bitcoin were truly in the banana zone, according to critics. Many altcoins have faced steep pullbacks, and Bitcoin's movement has been unpredictable. Pal may have underestimated significant macroeconomic challenges, liquidity constraints, and shifts in investor sentiment, limiting Bitcoin's potential breakout. Skeptics believe this. Some are questioning if this cycle is following Pal's original prediction. Raoul Pal has released a market update, standing by his belief in the intact banana zone, despite skepticism. The banana zone does not mean a non-stop vertical rally, according to Pal. It unfolds in stages, with strong uptrends, followed by necessary corrections. Many investors make the common mistake of expecting prices to rise in a straight line. Pullbacks are a natural part of market cycles. Similar corrective phases occurred in previous bull markets, often shaking out weaker hands before the next leg up. Pal remains confident in the validity of his framework, which provides insights into Bitcoin, the banana zone, and global liquidity.
So then what's the probability of scammed at the token level? 0. These are huge, distributed, multi-million people networks.
Speaking of Ethereum and Bitcoin.
Yeah, and Solana and many of the big ones.
By market cap, the top ones, kind of like the same.
Where people lose their minds is they want to get rich quick.
Chasing the next meme coin, the next big thing.
Well, because people suddenly start to say, oh my God, I don't need to be trapped in the world of 10% a year in the stock market.
Right.
I've now been given this 100% a year, and then you become greedy. All you see is, I could make 1,000% or 10,000%. And then you do stupid shit. And that's when you get scammed. Because now you're exposing yourself away from the simple bets of investing in the technology layer to now you're investing in the applications layer. And that's when businesses are starting, who's building what. You know, it's a meme coin, it's a DeFi protocol, it's all of these things.
ICOs back in 2017,
and
2018.
Then you've got to ask yourself, are you qualified to be a venture capital investor, early stage? Are you doing the due diligence?
Taking the risk as well.
Taking the risk. Yeah. Right. They all are a power law. And so what that means is most of their bets go to somewhere near 0. Or let's say 20% go to 0, 50% don't do anything, and 10% make all the money. Now, are you qualified to do that? No, then don't do it. You don't have to do that bet when the assets are growing at 150% a year at the base asset, Bitcoin or Ethereum. You don't need to buy NFTs. You don't need to buy meme coins. You don't need to do any of these things. That's the really hard thing, is the system sucks you into greed if you're not careful, and it's unnecessary. You see, everybody looks at it through their lens. And the lens may be, you're from Venezuela, so you think you can have it expropriated. Or a gold investor in the US, well, they took gold. They didn't do it in Europe. But different people use their different lens. But we don't realize, and so you're worried about regulation.
Right.
It's a global asset. The Chinese have banned it. And the Indians, nothing happens.
Right. A little dip here and there.
Why? Because this is a network of millions of individuals. This is not driven by the institutions. It doesn't matter whether they come or not. People want to be validated. It's a ridiculous thing.
Yeah.
Oh, BlackRock think it's good, so therefore I'm not stupid. It's like, you're not stupid because literally hundreds of millions of people are using this.
Right.
making money from it, building on top of it, and creating a new future. So therefore, you can't be stupid. You do not need some bloke on television telling you that it's valid. So what we've done for the first time in history, if we go back to how I started this journey, those of us at the center would get the opportunities. And then you would charge layers of fees until it comes down to the individual. Well, they didn't even see them. They don't get to invest in Facebook when it launches. You know,
or Uber or Airbnb or whatever.
Anything,
Yeah.
right? We don't get any of that stuff. It eventually goes into the public stock market and at several $1 billion. Yes, it went up a lot after that, but somebody's made 1,000,000% returns before then. Right? This is the complete inverse. There are no gatekeepers. Retail are first. They front run all of the institutions. They get all the opportunity, all of the upside. And the institutions come later and force the prices up, and we all get hilariously rich. Genius. It's a complete inversion of how the financial system works. So it doesn't really matter. I know people want the validation. Regulation helps because it stops governments shutting down your business in a different country. So yes, it helps, but don't forget, it's currently a $3 trillion asset. I think it goes to 100 trillion. The only way it gets there is to have more larger and larger pools of capital coming into the space. But if you think of it in those terms, it's still only 3% of the journey to where it's going to in the next 10 years.
Jesus.
Yeah, so it's
Your thesis of 100 trillion for the asset
so
class?
therefore it goes up 30x from here. I mean, again, people don't realize that. Am I too late? Bitcoin's at $100,000. Am I too? I'm like, it's 3%. And it's therefore it should go up 33x from here. Okay, find me anything else. Assume that I'm wrong by 50%. It goes up 15x from here. Find me another investment anywhere in the world that will unfuck your future like this. It doesn't exist. Certainly not one you've got access to.
Global liquidity is a key factor shaping this market cycle, driving risk asset growth. Bitcoin's price movements are closely linked to the expansion of global money supply, as Raoul Pal has consistently maintained. Historical data supports this view. Total global liquidity has shown a strong correlation with Bitcoin and the Nasdaq over time. The overall liquidity environment remains supportive despite recent market pullbacks. Liquidity expansion continues through mechanisms such as government spending and bank balance sheet growth, even though central banks may not be actively printing money. Bitcoin and other hard assets have become increasingly attractive in a world where fiat currencies are losing value due to excess capital needing a place to go. The path forward will not be entirely smooth. Pal describes the current market as experiencing a liquidity air pocket, where money is not being withdrawn from the system, but is also not expanding rapidly. Some investors may doubt the broader trend's strength due to short-term corrections caused by this type of pause. Pal sees these phases as both inevitable and necessary. Prevent excessive leverage and speculation to maintain long-term stability. Another strong move could be just around the corner, if history is any indication. Bitcoin's current chart patterns suggest upcoming significant price increases. Liquidity conditions are likely to improve due to broader macroeconomic trends, such as expectations of monetary easing later this year. Pal remains confident that the banana zone is far from over. It's simply moving through its natural cycle of surges and corrections. Here are more clips from his latest video to dive deeper into his analysis.
But that has a massive risk profile of loss of life.
Yeah.
Right, so I understand, like people in economic hard times choose extreme situations. Now, given the choice, let's say you are on a border town in Mexico,
Right.
right, and you can either work for the cartel and get a decent living, but you've got risk of death. You can probably make higher percentage, well, you will make higher percentage returns in crypto and not have to have risk of death. So really, it kind of should force a lot of people out of other industries, more illegal industries where people need to make money. Because the reality is people in the drug business aren't bad people necessarily. The system is bad of what they're doing, but really they're just individuals trying to unfuck their future. If you're in the cocoa farms in Peru, you're not thinking that your farming is killing kids in nightclubs in Chicago. You're like, I need to make a living, pay for my kids. I don't want my kids to die off, So the incentivization structure is very different. But here we've got something that can get you out of that. It's fascinating.
The life raft.
And I see it here. The guy who cuts my hair is from the Philippines, and all the guys in the barbershop are all Filipinos. And they're all crazy crypto dudes. I'm like, why? What got you into this? And Asians like gambling. Okay, I get that. But he's like, simple is we send money home to our parents or to our families, remittance payments.
Yep.
And we just learned that crypto was the easiest rail, so we all opened a Binance account.
Yeah, P2P, and that's it.
And then once I've got a Binance account, I'm like, what's this? Oh, this is going out. And then they're in.
Right.
And so these are pretty simple folk from the Philippines. I mean, my barber had here in the Cayman Islands, if you haven't got a permanent residency, every 7 or 9 years, you have to leave for a year and come back and reapply for your permit. And he'd been off for a year. And I just saw him last week. I'm like, Jules, what have you been up to? Were you working in the Philippines? He's like, no. I said, why not? He goes, Solana. He's like, I didn't need to work. I'm like, really? He's like, yeah. He goes, I made 10x in Solana. I spent a bit of that. Didn't work. So I spent a year with my family doing some good stuff, traded a bit of crypto. I'm like, okay. That's the empowerment.
That's what you call the lifestyle chips.
This is a barber from the Philippines that's working in the Cayman Islands. And he can not work for a year because of his investments. That's La La Land. Go to a barber in New York City and say, hey, you're not going to work for a year. Can you survive? No. Zero
Not even for a week.
Yeah, zero chance. You only would sell it under the worst duress, the worst situation. Like I was speaking to a friend of mine who fled Venezuela. They sold all their assets, fire sale prices. But otherwise, look at your parents. They still own their house. So what the fuck was that money for? What? So they have a roof over their heads? Well, you can rent and do that because, as you rightly said, if you don't pay, you go through tough times, lose your job, or your business falls apart, and you can't pay your rent. You don't own the house. It's gone. Goodbye. So what's the difference to renting? If you're not actually getting an asset. Now, it's different if you're buying other houses as assets to build a portfolio.
A multi-family complex and renting.
Whatever. And I still don't even like that business. But let's assume you'd want to do it. Fine. But your house is not an asset. It will get you nowhere in life.
You mean the average single-family home?
Yeah, your apartment or whatever it is.
Yeah.
It is not an asset. Now, it becomes an asset in lifestyle terms when you don't have a mortgage on it. Because now it can't be taken away. Yes, the government can theoretically, but it comes much harder.
Right.
So therefore, that is the game, which is the lifestyle chips. That's lifestyle ratchet. That is not an investment. So the game should be, how do I make enough money that I can buy that apartment in cash? That is very different because the apartment is not the asset. The lifestyle is the asset.
Funny, here I see you have a point in common with Dave Ramsey. Pay cash for your property, for example.
Yeah, but most people don't have the opportunity. But I'm giving you the opportunity. I'm telling you what it is. I'm telling you how to do it. And most people still don't take it because they've been so poisoned by this idea that the house is everything. Now, if you go to Germany, most people don't own houses. They rent. Same in France.
Very pragmatical people.
Yeah, but also because that they don't have a giant financial system. And it's a story told, a mimetic, which is you must get a mortgage as soon as possible in the house. Why? Because you're financialized. So here's a story about this. Back in the early 80s, the UK had been a more socialist, more on the left than the right, as countries go from one to the other. And Margaret Thatcher came into power. Now, after World War II, we had a huge issue. We had asked all our men to fight and women to go through the hardship of war. 20% of the entire population of Europe was killed. Many people came back from war injured. They had nowhere to live. They had to rebuild their lives. And we started the National Health Service. So did several European countries. That's why the Europeans have free healthcare and the US don't. is because we owed it to all of these people who came back from war injured. There was no way they could afford it, so the government had to. Okay, so people don't really understand the impact of World War One and Two. They were so big. The other thing is that there were people, houses had been destroyed, people had to rebuild lives, and there was this young boom of baby boomers, and people couldn't afford to buy the houses. So the government built houses. They were called council houses. And you can get them for free. Or very small rent. You just had to prove that you didn't have a larger income, etc. And much like healthcare, you had free housing. Revolutionary idea. What Margaret Thatcher did was realize those people, because they don't have a stake in the economic system, voted left. Give them the house and give them some debt, they vote right. So what she did was
Populism.
Yes, and what she actually did was gave, and a friend of mine, we had a council estate nearby me, and my closest, oldest friend grew up on the council estate. Their parents got to buy it for virtually nothing, huge discount to its actual value. So it like your airdropped a house.
Jesus.
And you buy it for 20 grand, and it's worth 120 grand. Right? So suddenly, you buy the house. How do you buy the house? With a mortgage. Now you're financialized. These people went from creditors, because they used to have their savings, to debtors. And now you're in the financial system, and you're in the banking system, and you're the self-perpetuating thing. Buy a house, get more debt.
Right.
Fund the banking system. The banking system funds the government. It's all part of this kind of industrial finance complex. And the housing story is one of the stories told to you, much like the S&P 500 pension story is one of these stories told to you that don't actually solve the problems anymore. They used to many years ago. And that's why I urge people to think differently and opt out of that system. I'm not saying a house is a bad thing, but don't think a house is an asset, because you will never sell it.
Pal firmly said no. The banana zone has not been cancelled. The real question is whether investors have the conviction to hold through corrections and benefit from the next move up. According to Bitwise CIO Matt Hoogan, recent pullbacks in Bitcoin could lead to a significant 190% rally for the asset. Hoogan introduced the concept of Bitcoin's dip and rip pattern in a memo to Bitwise investors. Juan Leon and his colleague analyzed past instances of the S&P 500 dropping more than 2% in a day. During these events, Bitcoin declined around 2.6% on average. Investor risk perception influences Bitcoin's price movements. Those who held or bought more during pullbacks saw an average 190% increase in the following year, according to Hoogan. Hoogan applies Wall Street's net present value framework to cryptocurrency. Bitcoin's valuation is not based on cash flow like traditional assets, but on future expectations adjusted for perceived risk. Short-term price drops in Bitcoin are caused by economic uncertainty as investors seek higher discounts, but this increases its long-term value. Bitcoin's net present value was temporarily lowered by the recent sell-off due to tariff-related concerns, despite an improving long-term outlook. Bitcoin could stage a strong rebound following the same pattern seen in past cycles if market conditions stabilize and risk perception eases. Like the video, subscribe, and turn on notifications for updates. Share your thoughts.